Can do. Yo, business owners, how are you? Man, I've got a fantastic solution for you. And, we live in a great time. We really do. I got to tell you, you're going to love this. So, we're going to talk about sequence, which is primarily what I talk about on my account because I'm so geeked on it. And I use it for personal finance solutions, but they have a business applicability as well. And that's what I'm here to show you. Every once in a while, you stumble across something that just is like, man, where was this 5, 10, 15, 20 years ago in business? This is the coolest thing. So this is a financial router. What you're looking at on my screen here is a map of three fictitious businesses underneath a umbrella company. And I'm going to show you how you could have a lot of the tedious moves that you need and that you would be concerned with automated. And so you don't have to think about them anymore. You just need to monitor them. You don't need to be concerned and have this math constantly happening in your accountant's, your bookkeeper's head. Now you'll be able to automate a good amount of it and just oversee it. Before I get into that, I do want to say that Sequence links to other banks. Sequence is propped up by Thread banks, so all the accounts that I'm going to show you can open are technically sub accounts of your master account with Thread Bank, and your ability to link to other banks is what's so profound with Sequence. And you have this fantastic ability to move money from business to business, and moves that you need to do, they could be automated. With that, however, comes added banking security that is really a prerequisite. And so you have to use an authenticator app like Google's Authenticator in order to get in. Anytime there's a money move, there is a 6-digit code for two-factor authentication. So somebody within your company is going to have this. If it's not the owner, it's your accountant or bookkeeper. So other folks could log into this if they're able to get the authenticator code, but they won't be able to move any money without receiving the code on their phone and then uploading it. So there's great security in making sure that this system doesn't get corrupted. So let's just put that to rest right off the bat. The security features are second to none. That said, the ability for you to make these moves is really going to revolutionize the way you think about your business, I think, as well. So let's just get right into it. So here we go. You're going to see, let me shrink my head and get out of your way here. And so in this case, on this map, by the way, you could set up this map any way you want. So don't feel that the way you see what you see on your screen is the only way you could set this up. You see this little magnet down here. You can click on the magnet, and when you make it solid white, you hit the shift key, and then you can highlight a whole range. Okay, so here we go. So if you want to select a whole group of accounts and move things around, you can do that. There we go. You can highlight a bunch of accounts that you want to move around and then move them. However you want to lay this out so that it flows in an ergonomic manner for your needs, so be it. You can highlight a whole bunch and move around. You can move an account like this. So the quick and dirty, these are meant to be external lending institutions that you've linked. This is on Playground. There will be a link to this in the show notes. And Playground, you'll get to see this exact example and kind of emulate it or look at it. If you open a Sequence account, it'll look a little different when you look on these accounts. When you go to add an account, your ability to do so will be done through Spinwheel or Plaid. So when you see the accounts here on the right, you will have a checking account number and routing number. And you'll also see for the pods, you'll see a routing and account number, and you'll see a debit card. The speed with which you can create a new account, and then after you've created that new account, create a debit card is unbelievable. And the uses for this in business, I mean, really are mind-blowing. So if someone loses a debit card, now you don't need to worry about that. If you had a debit card number in your business and somehow it got stolen and someone was able to use it, all you have to do is delete a pod. It takes about 12 seconds. We'll add a pod and we'll just call it example. there's the example account, and they put in a fictitious dollar amount for a balance because this is the playground. But you could click on it and you can see that there is a debit card. All you have to do is activate it. You activate it, that takes 2 seconds, and then it's live. And if you have an account out there that has been infiltrated, shall we say, you can just transfer the money out of this real quick. There's an ability on the actual live screen to do that. And then the money's out, delete the account. Delete, account's gone. That's actually what it's like to open an account and get rid of an account in the actual sequence. Those are pods, and those are the purple pods that you see on the sides. These are all sub-accounts within sequence. In the middle, the way I've set this up is we've got 3 fictitious businesses, each with their operating account, with a main checking account, shall we say. Sorry. And then we've got a lot of people use Square for point of sale, and Square has, if you want to take advantage of their full features and get money from them quickly, then you have a bank account with them as well. So I've shown 3 different businesses. We're in the hospitality business, so we have operating accounts for each of them, and then we have Square accounts as well. And so these accounts for business 1, for venue 2, for venue 3, or business 3, they each have accounts that are linked. And I'll show you some of the linkings here. When we receive money, we have the incoming funds port for sequence, and then the money can come in and then gets dispersed however you like it. And then the ability to link additional banks as well. So in this example, we have already linked together business number 1, venue 1. So money comes into that incoming funds account and we get transferred from Square, so that within Square, we set up automated deposits. So those automated deposits hit our income source, and now we're able to create a rule structure. And the rule structure is where you as a business operator are going to have time and bandwidth freed up. You know, I cannot tell you the number of people I've met who have had to deal with sales tax drama or pay an external company to toil over sales tax collection and holding for their quarterly filings. Now we've just automated this process. I have another video. I'll put a link to that as well. It's just a short. And the title of that video is the formula that you will use to figure out, you'll figure out what you should be pulling out of your net deposit and holding aside in a separate account. And so the assumption here is that your processor, almost all of the institutions now take out the credit card processing fee before the deposit hits your account. So now credit card, and we're just going to call it an even 3% for argument's sake here. So it's 3% that they've taken out, and now the net deposit has come and hit our income source pod or port. And so from there, we've created a rule where on incoming funds, 9.16% of that net deposit is going to sales taxes and is getting set aside right away. So it doesn't muddy stuff up. So now every time money comes in through that port, and that port really only is going to be used for business deposits. Now that money is going to come in there, and 9.16% of it right off the top is going to sales tax. We don't even need to mess with it anymore. So in this example, I hear a lot about the profit first movement and pay yourself first because you're not paying attention. You know, if the money's in your account, you're going to spend it frivolously and you're not going to adhere to your own budget paradigm that you'd like to implement and hold your feet to. Now we're able to do that. And so in this case, we have a profit first pod or account that we created. We have an operational account that we created. But once again, you can move these around any way you want. So if you don't like how I set this up, don't get caught up on that because you could do whatever you want. Go to playground.getsequence.io and you could start messing around. The link to this particular example you will find in the notes below. So fixed costs, we're saying like non-rent operations, CapEx, we have an allocation that we want to start doing for capital expenditures, and annual bonuses for our lovely salespeople, and rent. And so I deliberately didn't do rent yet because I wanted to at least link an account for you so you could see it. But in this case, just to encapsulate everything thus far, sales taxes for all three of our businesses are over here. And as soon as money is hitting their accounts, the formula is there. And so in this case, you would just put 9.16%. I'm in New York. So boom, now whenever money hits this account, 9.16% is immediately going to go to this pod. And we would set up and make payments to the state from this pod. There's a routing and account number, and you're able to set it up like that. This is very easy. And once you set up the rules, it's set it and forget it. So on this rule structure, what I did is, okay, we created a rule. And the rule was this. Based upon our budgets and how our P&L has been working, month to date, quarter to date, year to date, these percentages are pretty much how the business is running. So in this example, 9.16% is getting pulled aside right off the bat for sales tax because that's not our money. Profit first, we're going to pay ourselves 15%, and 15% is coming right off the top of whatever came in, and it's going to go right into the profit first bucket. Then we've got operations, and operations, prime cost, we'll call that, which is, you better know what prime cost is. Do you know what prime cost is? Prime cost. Cost of goods plus labor. Your big ones. So prime cost is going into the operations bucket, 50%. That's payroll's getting paid from that, and all of our cost of goods are getting paid from that. CapEx, we're putting 10% into CapEx because we want to grow and we're going to do some special things with some of our stores. So 10% of all those monies are coming in. This is an example. Your numbers may vary. And then annual bonuses. We want to pay our lovely salespeople. And so thus far, 5% has been going to annual bonuses. And then you'll see that down here on the bottom, 10.84 is still remaining. If we don't distribute that, then that's going to stay in this account. So if you didn't distribute that, it would just stay there. But you need to keep in mind that this account is not a spending account. It's an incoming port only. So you have to send that money somewhere, either to one of your external banks, if there's an external institution that you want, or to one of your pods that you've created, which are sub-accounts. What we've done, by the way, with these sub-accounts is we actually use them as debit cards in our wallet, which is a very cool feature to be able to do. So in this case, rent has been trending 7% of our business. So we're going to say, add an account, 7%. 7% is going to go to rent. Venue number one's rent. And it's done. Now, what do we do if we're coming up just a bit short and it's not panning out? We'll have our profit first pod prop up our venue number one's rent. And this is going to be triggered by date. And this is where some of the rule structure really gets to be fascinating and liberating. And we're going to say, what's our triggering schedule? What's going to trigger this? It's going to be triggered by date. And is it going to be on a daily basis, monthly basis, weekly, bi-weekly, etc.? And so we're going to say monthly. And one thing that's very cool is you could choose every date of the month, or because we all know that some months have 28, 30, 31 days, etc. So you just do the last day of the month. So if on the last day of the month, we're going to top up venue one rent to a balance of $3,000. Now, no matter what, when rent is due on the first for that business, if we haven't hit the monetary paradigm that we need to, where 7% of our revenues wasn't enough or came just shy, shall we say, of what we needed in order for $3,000 to be there, now automatically it will pull from the profit first pod, which we didn't really have that profitability because we still had to pay rent now, didn't we? So that is incredibly helpful. So this is a great example of how you can run your operation and how you can make things really easy. You can move the map around, you can zoom in, you can zoom out, You can get down and dirty. You can move operations aside, and you can say, you want to know what? We had a couple hiccups here, or I would prefer that payroll always gets taken care of, and we never have any issue with payroll. And so payroll, we have, in this example, just to keep it easy, we don't have any hourly employees. Let's just say we only have salaried employees. Now we can go from operations to payroll, and it's going to be triggered by a date. And you can say, what's your date type? You could do it weekly on Fridays, and you're going to transfer, you could transfer a fixed amount. You could transfer a percentage of the operations account. You could round down operations to a certain number. In this case, we're going to transfer a fixed amount. And let's just say your weekly payroll was always $10,000, right? You're going to transfer $10,000 to payroll. Done. And in this case, I like just deleting the dollar amounts on all these because these are fictitious accounts anyway, so it gets things confusing. So every week now, from the operating account, operations account, I should say more specifically, you're now going to have $10,000 on Friday in that account ready to cover your pay. So what you can do is you could prop up the payroll account that we've created here with the profit first account. And so here it is again for the rule structure. And this is going to be triggered by a date. What's the date type? It's going to happen weekly. And every Friday, we're going to top up payroll to a balance of $10,000. So now we've said it. If we don't have enough money for rent on the first of the month, it's coming out of profits. If we don't have enough money to cover payroll, boom, it's coming out of profits. Now, everybody is operating on their percentage or dollar-based paradigm, and we have a rule structure set up to enforce that. And we don't have to think about it. It's just done. Now you're focusing on driving your business. So this map in particular, you can really get creative, and you can see here that we could shrink it. I mean, you could create myriad accounts, man. You could really get good with it. And what I've found is that the more you really think about things that are of importance to you, like here's another one for you. I'll give you one more nugget. Being in the restaurant business for so long, we have somebody that always goes to the farmer's market to make purchases, and they have to go with cash. And often they don't have enough cash because of whatever reason. So now we can create an account for Tony. Tony's the one who always goes to hit the farmer's market. And so we're going to add an account, right? Sorry, this is an example of adding external accounts. In this case, we're going to add a pod, right? We're going to add a pod, which is an internal account, and we're going to call it farmer's market. And farmer's market is going to be over here. And farmer's market is going to get funded by operations, and it's going to get triggered by date. And we're going to say in this example that the farmer's market is every week on Wednesday. It could be Saturday, it could be Sunday, it doesn't matter for this example. But we'll just say weekly, we're going to transfer a fixed amount. Let's transfer a fixed amount. And we're going to say $500. $500 to the farmer's market. This is now going to happen weekly on Wednesday. Every week on Wednesday, $500 is going to go to the farmer's market account. And then what we could do is we could create a rule from farmer's market, triggered by date, on a weekly basis. Every Thursday, transfer, round down farmer's market to a balance of 0. And you're going to round it down back to operations. Save it. So, every week, he now has, what happened here? Triggered by date, date type, doing it weekly, every Thursday, transfer a fixed amount we're actually going to transfer and round down farmer's market to $1. Boom. Now it's done. Okay, so here's a great example how within like a restaurant environment, say we had this guy who's going to go to, say, we'll call him Tony, and he's going to go to the farmer's market every week on Wednesday, and we spend just under $500 every week, usually between $400 and $500 every week. Now, this is something in particular that can get automated. And so we have those monies getting transferred to the farmer's market every Wednesday. And we also have money coming back, and we're rounding down on Thursday. So I'm going to show you that. I just realized, I was like, what the heck happened to what I was setting up? And now I see what I did wrong here. So let me just delete those. Yep, and deleted. Okay, so now we're setting up a rule whereby Wednesday, there's money in that account for purchasing produce. Thursday, there's not. And so after that, it's done. Now we've protected all of our funds. We don't have a huge operating account, and we're giving someone keys to the castle. We're not having to deal with cash. There's greater transparency. We'll be able to code these transactions through automations with our accounting software and accounting team, and we can move on with our life. But in this particular case, what I'm going to say is, like, what type of rule do we want to create? On Thursdays now, any money that's left on that farmer's market card is going back to operations. So the trigger schedule is this. On a weekly basis, on Thursdays, the condition is if the balance of the farmer's market account here is more than or equal to $1, transfer a percentage, and in this case we'll just call it 100%, transfer 100% back to operations on Thursday. Save it. It's done. So those two rules in particular, they overlap. So here they are. On Wednesday, $500 is going to the farmer's market card, and on Thursday, the balance of that farmer's market card is going back to operations. It's done. The number of ways that you can get cute, that you can start doing crafty stuff with this, is incredible. And just have a look around me. I feel like I'm like on the Brady Bunch here. Here's a story of a lovely sequence. Isn't this cool? I mean, guys, come on, man. This is what it is. This is automated. You can still have a map to it. You can link every single one of these accounts to your financial software, so you have a running total of what everything is. So linking these bank accounts with QuickBooks or whatever financial accounting platform you're using is a piece of cake. Set it and forget it. Maintain the accountability that you want. Get the clarity that you need. Get yourself into the sequence game. I hope this helps. This is Dave with Essel Does It. Check it out. I'm out. All the best.